video, I have prepared 61 objective question which is related to national income. As we know that the board is going to arrange objective or multiple type questions for first final exam which is going to be held in the month of December. Keeping the ideas of exam, I have prepared these questions. Here there is no options but direct sentence has been taken. So if the direct sentence is in your mind, you will be able to choose the correct answer whatever the question it may be. So dear students, it is my effort, and you should also make some effort to mug up all these things or to keep the main points in your mind, so that it will be very easy to solve the problems which is related to objective question. So this question has been taken from the national income, that is the first chapter. So now come first, consumption of all goods and services in Indian economy during the period of an accounting year is known as aggregate consumption. Classification of goods depends on the end user of the goods who is going to consume. Next, classification of goods depends on the end user of the goods, such as a sewing machine is purchased by a tailor, then it is a capital good, but the same machine is purchased by a household, then it is consumer goods. So end user will determine which kind of goods it is. Next point, final goods are used by the consumers, producers and government. So here there are three main persons who are ready to use the consumer final goods, that is the consumers, producers and government. Next point, those goods which satisfy human wants directly are called consumer goods. Next, capital goods are those goods which are used in the production process for several years, which involve depreciation loss. Food processor used by the households in their kitchen is an example of consumption good. Increase in the stock of capital is known as capital formation. TV, radio, washing machine, etc. are example of durable consumer goods. Okay. Next is the 9 number. Net investment is equal to gross investment minus depreciation. Net capital formation causes increase in production capacity. Net capital formation causes increase in production capacity. Next point, a quantity measured per unit of time period is known as flow variables. A stock variables has no time dimension and it is static. Depreciation includes wear and tear, foreseen obsolescence and unexpected obsolescence. Factor services rendered by the household to the firms led to real flow. Reason for circular flow of income is mutual interdependence of producers and household sectors. Final goods are those goods which have crossed the boundary line of production and are ready for use by their final users. In the estimation of national income, only the value of final goods is taken into account. The classification of goods as an intermediate goods or final goods, only its end use is taken into consideration. Accounting year is the year during which production of goods and services is estimated in the domestic economy. Next, Durable consumption goods have relatively higher value than the single-used consumption goods. Electric goods are example of semi-durable goods. Non-durable consumption goods are also known as single-use consumption goods. Higher production of consumption goods leads to higher level of welfare of the economy. Gross investment refers to the production of capital goods during the year. Net investment enhances production capacity in the economy. Only expected obsolescence is considered for the estimation of depreciation. Capital loss of capital loss refers to the loss of value of fixed assets while they are not in use. A stock is a variable measure at a point of time. Money flow refers to the flow of money across different sectors of the economy. Next, population of a country is a stock concept because it is related to a point of time. Domestic income is equal to national income minus net factor income from abroad. Depreciation causes the difference between the gross domestic product and net domestic product. A base year is the first year of a series of years in an economic index. Indirect taxes of goods tends to raise the market price of the goods. Real GDP can increase only when the flow of goods and services increases in the economy. Domestic factor income may be greater than national income when net factor income from abroad is negative. Factor income is the income received by the owners of the factors of production in the form of rent, wages, interest and profit for the service rendered in the production process. Transfer income are those incomes corresponding to which there is no value addition in the economy. Next, nominal GDP refers to market value of final goods and services produced within the domestic territory of a country during an accounting year. It is estimated using the current year price. Net domestic product at a market price refers to market value of final goods and services produced within the domestic territory of the country within 1 year, exclusive of depreciation. So net indirect taxes are equal to 0 in case indirect taxes are equal to subsidies. Domestic income as well as national income include only a factor incomes. Household inventory is not included in national income because it is a stock concept. Remittances from a relative working abroad are transfer payment, so it will not be included in national income. Gross domestic capital formation is gross domestic fixed capital formation and change in stock or net domestic fixed capital formation plus inventory investment plus depreciation. As a result of double counting, national income is overestimated. Own account production of services is not included in national income because it is difficult to measure market value of such services. Factor inputs include land, labor, capital and entrepreneurship. Distributive profit is that part of profit which is distributed among the shareholders. Inventory investment refers to change in stock during the year. Income tax or any tax is treated as transfer income in the estimation of national income. Value added method is used to avoid the problem of double counting. Distributed profit is also known as dividend. Commodity, service, Method is the another name of value added method. GNP deflator is equal to nominal GDP, nominal GNP divided by real GNP into 100. GDP does not account for externalities. Market price is not always more than factor cost. It may be equal to factor cost if net indirect tax is 0. The concept of normal residents applies to individuals along with the institutions. There are three components of net factor income from abroad. First, net compensation of employees. Second, net retained earnings. Third, net income from property and entrepreneurship. Domestic territory refers to the geographical territory administered by the government, within which person, goods and capital circulated freely. Three phases of circular flow of income, that is our generation of income, distribution and disposition. There are two types of GDP. One is known as nominal GDP and other is known as real GDP. So